Welcome back. Let's focus our attention on the market now. Ritu Arora is Chief Investment Officer with Canada HSBC Life Insurance. She's joining in right now. Ritu, thanks very much for your time. Appreciate you being with us here. You know, the big story, the corporate story really has been the a change in leadership as far as the Tata Group is concerned. You know, it's one of the largest set of companies which most fund managers of all types would end up owning, just because of the sheer size and weight that they occupy across industries. As a fund manager, Ritu, how do you look at this entire sort of set of events which have happened so far? I'm not asking you so much for your views on what may happen next or why this happened, but from a money manager perspective, how do you see it?
Thanks for having me on the show. Clearly the board action is unprecedented, has caught everyone by surprise, and you saw the reaction in the market. But having said that, Tata Group is very respected for the corporate governance. They have very high standards, a very deeply entrenched value system, and a very big talent pool. And each company has been run professionally and independently for a very long time. And hence I would continue to focus on the intrinsic merits or the challenges that each of those businesses are facing, rather than give undue weightage to this board shuffle or changes that might happen. And of course we'll continue to see a lot of news in the next couple of months around this. But my focus will continue to be on the individual businesses and how they're being managed and how they're being run.
So there could be an actual change in direction there as well, right? I mean, if one were to believe that the basic difference was under Mr. Ratan Tata as the chairman, the group expanded across businesses, acquisitions, etc. And Mr. Vistry wanted to consolidate, maybe divest holdings in loss-making entities or non-core areas. And if one were to believe that that is the core reason why this happened, then under Mr. Tata, some of the actions which have been planned may be reversed. Chorus, for example, right? I mean, the sale, we don't know whether that will proceed as planned.
So like you said, it is all in the realm of speculation at this point of time, and we don't have any official statements yet. So difficult to anticipate. One would obviously continue to worry, speculate, but really little on basis which one can really take action. One would continue to watch the space with deep interest, and for now focus on the fundamentals and factors that are known.
Ritu, what's your view on Axis Bank and the numbers that they've reported? What should a long-term investor do now in an Axis Bank stock?
I would worry about the corporate lending banks in the private sector space. Have been bullish about private sector banks for a while now, but more focused towards the retail focused and consumption banks that lead the consumption story, because I believe that Indian domestic consumption is what will be the part of the economy which will lead the indices in the coming few years. That is the only part which is isolated by from the global turmoil. And even when I look at the banking stocks, I prefer to focus on banks or NBFCs, housing finance companies, which are aligned with the consumption recovery story, rather than very large corporate lenders where we continue to see the stress as we saw in the PSU banks.
But even lenders like HDFC Bank, Kotak Mahindra Bank, they also reported some slowdown in their loan growth. Would that be a worry?
Clearly, banking system is a reflection of the economy, and currently the reflection doesn't look very healthy. One was anticipating to see some improvement. We have not seen that. Personally, for me, the fact that the consumption numbers have not been very encouraging of the results that we have seen, and the stress that we are seeing in these very large private sector banks, is surely a matter of worry and concern, and will be looked at very keenly over the next few results that we'll continue to see. But clearly it's a sign of worry.
Ritu, I mean, have you looked at the numbers, earnings in Q2 so far on an overall basis, the ones that we've got? Of course, I mean, a lot will report today and over the course of the week, but so far, what's your assessment of Q2?
By and large in line, except of course private sector banks are disappointing, and like we discussed earlier, consumption numbers have been disappointing. That was a turnaround that I was expecting to see in this results, and most of the FMCGs, paints, etc. who declare their results do not seem to show that in their number. The general results so far about sales growth of revenue growth of 6%, profit growth of about 5%, net profit about 4%. So nothing very exciting, but nothing very out of sync with expectations also. So I worry that this might end up being another tepid quarter, which was not the anticipation.
Ritu, thank you so much for your time today. By the way, for the markets,